Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of October 27th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage here to give you an update. Well, last week, Maryland mortgage rates ended the week about where they started. If you take a look at the bond chart on the screen, you can see mortgage bonds have been trading in a sideways pattern. That means they've been stuck between the two blue lines, capping a ceiling of resistance and a floor of support. Now you can see there was a big giant green candle spike on a Wednesday there. That is what the media has been talking about. Rates dropped into the mid threes. That didn't last long. It didn't even last that day. The bonds sold back off and dropped back down to the trading range we'd be in. The next day there's a red candle trying to break above that ceiling resistance, but didn't even end the day with a rally. It sold off and ended back right into the range we're in. So you can see we've been stuck in this tight trading range. If it breaks below that floor of support, that would be a problem. But right now, we're going to recommend cautiously floating your Maryland mortgage rate to start the week as we continue this sideways trading pattern. We're looking for a breakout above resistance, but if it breaks out below support, we'll quickly switch to a locking stance. So we'll keep you updated on that. Now, when we dig into the economic news, the big thing is mortgage bonds have been at the high of the year of 2014. That means interest rates are as low as they've been for 2014. So it's a great time to buy or refinance. And what's caused that? Well, it's basically been a flight to quality. The world economy is slowing down. It's not doing great. So investors are moving into bonds out of the stock market. We also saw the Ebola scare. That's causing people to be scared about the economy as well, moving money into bonds. We had some weak economic data on the U.S. economy. That's moved money to the bonds. And then the Feds are stopping their bond buying program. It should be at the end of this month. So typically that is bad for the stock market, so that's been moving money into the bonds. So overall, we've had a flight to quality that's helped mortgage rates, that's helped mortgage bonds, that's put interest rates to low for the year. Now, in other economic news, we saw the weekly initial jobless claims come out on Thursday. That was 283,000 claims for the week. Now, that was up 17,000 claims, but the previous week was the lowest it's been in a very long time. We're still well below the 300,000 mark, so a good report on the labor market. We're expecting with these numbers for jobless claims that the October jobs report should come out at least 200,000 jobs created. That could cause a short-term sell-off in mortgage bonds, so we'll keep you updated on that. And then we had a report on inflation. The Consumer Price Index, the CPI, was up 0.1% from last month. Year over year, it's at 1.7%. That's well below the 2% mark set by the Feds. Inflation's in tame. That's good news for mortgage bonds, good news for mortgage rates. So that as long as inflation doesn't heat up, we should see low rates continue. In the housing news, we had two good reports last week. The first one was a great report. Existing home sales for September 2014 came out at 5.17 million units on an annualized basis. That's up 2.4% from August's existing home sales of 5.05 million units. So this was stronger than expected, and it's the best existing home sales report for the entire year. So the people who said the housing was slowing, well, September shows it didn't slow for existing home sales. Actually, the best it's been for the entire year. And then the median existing home price was at $209,000. And home prices were up 5.6% year over year. So that was good news there. And then inventory for homes sold nationwide was down slightly to 5.3 months supply. And then distressed home sales nationwide dropped by 10%. So overall, very good, strong report on housing. Then we saw existing homes, new home sales for September 2014 come out last week as well, and that came in at 467,000 units on an annualized basis. That's a 6-year high, and it's up 0.2% from August. Now, there was some bad news in the report. August numbers were revised down from 504,000 to 466, and June and July were revised down some. But overall, still good numbers on new home construction. We're at the high for the year, and the median home price for new home construction was $259,000. So good report. Both reports support a strong housing market, so it's a good time to get out there and buy. Then we also saw the Federal Housing Finance Agency, the FHFA, announce that they are going to try and ease credit standards, which they believe has been holding the housing market back some and could cause a decline in housing in 2015 if they don't do something. So the first thing they're going to do is increase the maximum loan-to-value on conventional loans through Fannie Mae from 95% back up to 97%. Remember, it used to be 97%. They dropped it January 10th of this year. So they're looking at pushing that back up, meaning minimum down payment for home buyers are only 3%, hoping that'll help stimulate the market. And once that comes out for Fannie Mae, Freddie Mac should follow suit. So they're also looking at trying to do some other things, but that's the first one coming out. And then USDA released a website where you can check their turn times. So it's in the blog. Check that out. But right now, we checked that website. They're working off, as of Friday, they're working off a file submitted on September 24th. That's 9/24. So that's still a solid 30 days to underwrite a file at USDA. You need to plan that in your turn times. You got to add an extra 30 days on the end of your closing for them to review the file. In the local news, the next free first-time homebuyer seminar is Wednesday, November 5th. That's from 6:30 to 8:30 p.m. in Laurel, Maryland at the North Laurel Community Center. And then we have one that Saturday, November 8th in Frederick, Maryland at the Hampton Inn, and that's from 10 a.m. to noon. And then the following Saturday on November 12th, we have a seminar in Hagerstown, Maryland. That's from 10 a.m. to noon. And then on Saturday, November 22nd, we have one in Towson, Maryland from 10 a.m. to noon at the Baltimore Sheraton North Hotel on Delaney Road. You can register for either one of those events by giving us a call in the office at 410-412-3319 or online www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.